Hi, happy Friday. It's Tom from Hudson Valley Tax Experts. Wanted to take a couple minutes to answer some questions on the preliminary proposed stimulus bill as it was released yesterday. I'm getting a lot of questions, and hopefully this will answer some of them for people. If you don't know who I am, hi, nice to meet you. I'm an enrolled agent in Hudson Valley, New York, which means I'm licensed to practice before the IRS. I can represent taxpayers with tax issues like audits or state letters. I can help people with unfiled returns. And I also, of course, prepare individual and small business returns for people. So more information on my website if that interests you. So this discussion is very preliminary. Nothing is final at this point. The House Ways and Means Committee released their overview yesterday, and I'm basing these comments on that, which means, you know, we're two levels removed from reality of what really is in the bill. They have their summary, and then I have my interpretation of the summary. And even assuming we're all spot on there, things could change between now and whenever it gets voted. The earliest possible passage is it's going to be the beginning of March, and it could be delayed beyond that depending on how much horse trading happens during the writing of the actual bill. So none of this is final. Don't bank on any of this yet by any means, but this is what's in the proposal. So first thing is a new stimulus payment, $1,400 this time around, and that is not only per taxpayer, but also for any dependents claimed on the tax return, and it includes people that were not included in the original calculations for the first two payments. So it includes children over the age of 16. It includes dependents who aren't children, such as a parent or their family member living with you, claimed on your tax return. So for a family of four, we're looking at $5,600 maximum advance credit. The credit is based on income like the prior ones. The thresholds at this point are proposed as shown here, $75,000 for a single person, double that for married, splitting the difference between for head of household. Married filing separate isn't specifically called out in the summary released yesterday, but if it's similar to the first two, it would be the same as a single person. The credit phases out, it's reduced more quickly this time around, and once you get to the upper limit, which is 100,000 single, 200 married, 150 head of household, the advance credit goes away completely. So it reduces rapidly if you're above the threshold. And of course, the big question is, which income are we looking at? So this will be a 2021 tax credit that we're going to reconcile on your return that we file in 2022, this time a year from now, for this year's income. The prior two payments are being reconciled on the 2020 return right now. So because it's a 2021 advance credit, they're going to base it on the 2020 return if it's available. But if it hasn't been filed by the time they start making payments, they'll use the 2019 return if it's available. If neither the 19 or 20 return has been filed, they're not going to pay any advance credit. So people that haven't filed might want to fix that quickly. If people's income goes up such that when they actually do the 2020 return, they've gotten more of an advance than they would get on the 2021 return, there is no repayment, very similar to what's going on right now with the two prior payments. But it means because the 2019 income will be used if 2020 is not available, people whose income went up from 19 to 20 and who are in that range above the 75 or 150K thresholds might benefit from waiting to file their 2020 return to get a bigger advance payment. And some married couples may also benefit by filing separately if their income is disparate, not roughly equal, in order for one of them to get a credit that they might not get filing together. AGI that I've been using here is adjusted gross income, which comes from your tax return. The numbers would be on the line numbers as shown there if you want to look at your return to see where you're at. This is going to be obviously a decision based on your particular situation that you're going to need to discuss with your tax preparer, because it's going to be different for everybody. Well, go ahead. Additional changes in the proposal is expanding the child tax credit, and this would be a 1-year adjustment only. The child tax credit is additional offset for income taxes that's based on having a qualified child. So one change is it's going to be fully refundable in 2021, and that means that if you have credit that is more than your actual tax liability on the tax return, refundable credits come back to you. And previously, normal, whatever normal means anymore, it's been a maximum of 70% refundable back to you. Now it could be fully refundable. So even if you had no tax liability, you could get the full amount of the child tax credit coming back to you potentially. And it's been increased to a maximum of $3,000 per child, or $3,600 if the child would be under the age of 6, so 5 and under, on December 31st of next year. And it's been extended for children under 17, who normally, that would be when they would no longer be qualifying. For 2021, only a 17-year-old would qualify. The maximum is normally $2,000, and qualifying children are 16 and under. So that additional amount, the $1,000 or $1,600 per child, will be reduced for your income, for your AGI, based on the same thresholds as for the advanced credit. So the 75 or 150K limits for single or married filing joint would apply to reducing or eliminating that additional 1,000 or 1,600. The remaining 2,000 would be under the normal rules, which phase out at a much higher income level and much more slowly. Along with that, they are proposing to pay some of that child tax credit money in advance, so you wouldn't have to wait to file your 2021 return to get it. This is pretty much an entirely new system. I can't think of anything that's really been like this in the past, at least not recently. So based on either your 2019 or 2020 income from your tax return, they're going to issue periodic payments targeted to begin around July 1st and targeted to be monthly. But depending on how the implementation goes, that's not guaranteed to happen. It might not be monthly, it might not be July 1st, but that's the target. And they would estimate what your child tax credit would be and would split that over the months available and pay that to you in installments to equal half of the credit they estimate. And then whatever you actually got versus whatever you qualify for would be reconciled on your 2021 return. And unlike the other payments, this one, if you got more than you end up being entitled to on your 2021 income, you might have to pay some of it back. There's income requirements and so forth, but some people might have to make payments back if they got too much. And there'll be a new IRS website for reporting changes that might apply to control how much you get back, whether you're getting more income or getting less income, or if you'd be claiming children that you didn't claim previously, or vice versa. All that is entirely new, doesn't exist yet, and how exactly that works, we won't know until this passes and then gets implemented. The earned income credit is another benefit that's being enhanced. The EIC, earned income credit, is additional money that is available for people who qualify based on their income level and on the number of children they have on the tax return. So for taxpayers who don't have children and are qualifying solely on their income, there are a couple enhancements. First of all, the age for claiming it is reduced to age 19. So 19 and older could potentially claim this. Usually it's age 25. Certain full-time students do not qualify. They don't specify exactly what that means, what certain students are. So we'd have to see details. It also removes the upper age limit. So if you are over 65, you normally would not qualify even if your income was in the right range. That is removed for at least 1 year. And they've also increased the income levels to qualify and the maximum credit amount. So generally be a more valuable credit for those who can claim it. Certain spouses who are still married but are not filing together, so separated but not divorced, for example, will be eligible for the credit where they normally or previously would not have been. That may be a permanent credit. It looks like that might be the case from the summary. So we will see if that goes on. And when the 2021 return is done and the amount is calculated, if it's more beneficial to claim the 2019 income, then we can do that. So that's not a typo. It is potentially using 2019 income to claim the 2021 credit. So people that got a huge bump in unemployment, for example, in 2020, won't necessarily be penalized when they go to calculate their 2021 amount. The dependent care credit also getting a boost. This credit is available if you pay for child care expenses for you and your spouse, if you're married, to work. So if one person's not working, then this credit's not available. But if you're paying so that you can earn money, then the credit's been there. It is now, for 2021 only, proposed that this be a fully refundable credit. So generally that's not the case. So if you had credit more than your tax, it was just lost previously, now it would come back to you. The credit rate on the amount of expenses is raised. The income threshold for claiming the full amount has jumped from $15,000 to $125,000, not a typo. And the amount that you can use to calculate the credit has been doubled to $8,000 for one child or $16,000 for 2 or more children. Again, all this is proposed, not anything is definite, but that's what's in the summary. There's some other changes related to if your employer pays dependent care benefits, they can pay more in 2021 as a tax-free benefit to you. There's been some enhancements to the paid sick leave and paid family leave credits, eligible period extended to 9/30/21. Self-employed people can claim paid family leave on more days than they can for 2020, and the benefits are available to state and local government employees where that wasn't previously the case. People that are getting their health insurance through the exchange and our income is such that they're potentially eligible for a premium tax credit where the some of the premiums are offset, that is getting enhanced as well. So there'll be some help for people paying their insurance through the exchange. So that is it in a nutshell. Again, none of this is final. Do not bank on any of this, but that's where the proposal stands at this point. If you'd like to stay up to date, please visit either my website, blog, or Facebook page. If you'd like to be on the email list, I don't spam people. It comes up very infrequently, once or twice a month, but you can look at past archives and sign up through that URL that's on there. And you can always call or email me if there's anything you'd like to discuss. Thanks very much. Have a great weekend, and I hope this was helpful.